You've probably seen the headlines, right? Globalization is on its last legs. The story goes that after decades of a world getting more and more connected, everyone, countries, companies, is suddenly pulling back. But is that really what's happening? Today, we're going to dive into the data and see what's actually going on.
So let's just get right to it. The big question, is globalization actually over? I mean, when you look at the news, nonstop talk of trade wars, the supply chain chaos we all felt not too long ago, and just general geopolitical tension, it's pretty easy to think, yeah, we're going backwards. And you know what? There's definitely some evidence to back that up. Okay, let's look at the numbers. If you're in the yes camp, this first piece of evidence is, well, it's pretty compelling. See this chart? Global trade as a slice of the world's total economy. It was on this incredible climb right up until 2008. And then it just flatlined. For more than a decade now, trade just hasn't grown any faster than the overall economy. It's stalled.
And look, this isn't just some passive slowdown. This is active. Governments are literally putting up walls. In fact, since just 2019, the number of new trade restrictions, we're talking tariffs, quotas, you name it, has more than tripled. That is a serious headwind blowing against global trade.
So the case for deglobalization seems pretty solid, right? Stagnant trade, rising barriers. But hold on, that's not the whole story, not even close. If we dig just a little bit deeper than those headline numbers, a much more nuanced and, frankly, more interesting picture starts to come into focus. So what are we actually seeing? Well, it's something we're calling the Great Trade Realignment. And the key idea here is simple. Companies aren't retreating, they're rerouting. And we're not talking about a minor tweak here. The numbers are just staggering. A recent report found that nearly half, almost 50%, of corporations surveyed across Asia, the UK, and the US are either already moving operations out of China or have plans to in the next year. That's a huge shift on the world's factory floor. This really reflects a popular strategy you hear about a lot now. It's called China Plus One. As David Lean from Deutsche Bank puts it, it's not about abandoning global production, it's about diversifying. They're keeping some work in China, but they're building out other options in places like Mexico or Vietnam or even Poland, just to spread out the risk. Now, to really get what's happening, there are a couple of key terms that are super helpful. You might hear reshoring, which is pretty straightforward. It's bringing manufacturing all the way back to your home country. But what's becoming way more common is nearshoring. That's moving production to a country that's much closer. So think of an American company moving a factory from China to Mexico. So why is this huge rerouting happening? Well, it's a mix of things. For some companies, sure, it's about finding lower costs as wages in China went up. But for a whole lot of them, especially Western firms, it's really about geopolitics and risk. They're trying to build stronger, more resilient supply chains so they don't get hit by the kind of crazy production delays and tariffs we've seen lately. And all of this, it really boils down to one central tension: efficiency versus resilience. This is a fundamental shift in what everyone wants out of global trade. For the last 30 years or so, the name of the game was simple: maximum efficiency. The only question that mattered was, how can we make this thing for the absolute lowest cost possible? And if that meant your supply chain stretched halfway around the world through a dozen countries, so be it. Cost was king, period. But now, the new goal is maximum resilience. After the pandemic, after all the geopolitical shocks, companies had this huge wake-up call that a hyper-efficient supply chain is also incredibly fragile. Now, the top priority is having a stable, secure supply chain that can actually survive a crisis. And businesses are now willing to pay a little bit more for that peace of mind. But, and this is a huge but, let's be really clear here. This is a realignment, not a replacement. To put it in perspective, in 2023, China's exports still totaled a massive $3.5 trillion. That is nearly double the entire export volume of all Southeast Asian nations combined. So yeah, other countries are growing, but China is still an absolute giant on the world stage. And you know what? There's another massive piece of this puzzle we're missing if we only look at shipping containers and what comes out of a factory. The very nature of what we're trading globally has completely transformed.
Because while trade in physical stuff has kind of stalled, the new drivers of globalization are just exploding. We're talking about digital services, the unbelievable flow of data across borders, and intangible assets like intellectual property. This is a less visible, but man, it is an incredibly powerful form of globalization that's growing like crazy.
Okay, so we know globalization isn't dead. It's just changing its shape. So that brings us to the big question. How do we navigate this new world? What does all this mean for the future, in practical terms?
For any business out there, the new playbook is becoming pretty clear. First, you have to stay informed. The rules on tariffs and trade are constantly changing. Second, you have to diversify. That China plus one idea, it's not optional anymore, it's essential. And finally, engaging with policymakers and investing in compliance, that's just crucial to navigating the new rules of the road. So, if you take away one thing from all this, let it be this. Globalization is not dead. Not by a long shot. It's just evolving. It's getting way more complex as companies try to balance efficiency with resilience. It's getting more regional as nearshoring takes off. And it's becoming vastly more digital, powered by data and ideas, not just things. And that leaves us with one final, and I think really critical question. You see, the old unwritten rules of cheap, hyper-efficient globalization, they're fading away. As the world realigns into new economic blocks and networks, the race is on to define what comes next. Who's going to set the new standards? Who will control the new networks? Who will write the new rules of global trade? That's the challenge and the opportunity that lies right in front of us.